So here we'll do a brief discussion of 5 important terms from economic paper point of view, which I have taken and studied from trend analysis of PYQs. So number one, we have purchasing power parity exchange rate. So it is a rate at which the currency of one country would have to be converted into that of another country to buy the same amount of goods and services in each country. As for example, if a burger is selling in India for rupees 100 and in New York for $2, this would imply a purchasing power exchange rate of $1 to rupees 50. And on the purchasing power parity basis, China is world's largest economy in 2018, and it has a total wealth of 25.3 trillion international dollar. And China is followed by US, and India is the third largest economy in terms of purchasing power parity dollars. After that, number two is money multiplier. So it is the ratio of the stock of money to the stock of high powered money, and it is a relationship between the monetary base and money supply of an economy. So it explains an increase in the amount of cash in circulation generated by the bank's ability to lend money out of their depositors' fund. So it refers to how an initial deposit can lead to a bigger final increase in the total money supply. As for example, if the commercial banks gain deposits of rupees 1 lakh and this leads to a final money supply of rupees 10 lakh. So the money multiplier is 10 here, and therefore in increase banking habitat of the population would lead to more deposits and increase in money multiplier. So the formula is 1 by R, where R is the reserve ratio. The number three is capital adequacy ratio. So the capital adequacy ratio is determined by dividing the bank's capital by the aggregate risks weighted assets for credit risks, operational risks, and market risks. And this calculation involves adding a bank's tier 1 capital, then tier 2 capitals, and dividing the sum by its total risk weight assets. The number four, we have willful defaulter. So a willful defaulter is a person who is a borrower or a guarantor who has committed willful default, and the outstanding amount is of rupees 25 lakh and above. And a large defaulter refers to a borrower with an outstanding balance of rupees 1 crore. And the central bank has 4 criteria for identifying willful defaulters. So number one is borrower defaults despite having capacity to repay, and then borrower misuses loan funds and loan funds have been diverted. And number four criteria is borrower has dealt with assets without knowledge of lender. The number five and the last one is twin balance sheet syndrome. So this is a problem refers to the situation of over leveraged companies on one hand and bad loan encumbered banks on the other, and this had been an issue lingering for decades in the Indian economy. As for example, banks have an objective to loan money to corporates on interest, and these corporates have an objective to build projects, then earn returns and pay back bank loans. But the issue arises when bank waits for the returns and the returns from the projects are inadequate. Then they raise the cost of debt to counter risks. And the issue arises for corporates is that if the projects face payment issues, then a loan repayment becomes very difficult. So here, payment delays more than 90 days start being classified as NPAs, and if cost of debt becomes high and the returns of the corporates are lowered further, then higher cost of debt would also require them to charge more, which might exacerbate payment issues. That's all. Thank you.